Welcome to The Explainer. Today we're diving into something I think you'll find fascinating, the world of crypto influencers. We're going to really pick apart why what you hear online so often just doesn't line up with what the market actually does. Okay, let's just jump right in with this quote. Technical analysis without macro is astrology for finance bros. It's pretty much the core argument for our whole discussion. The idea is that so much of what passes for crypto analysis online is completely missing the biggest piece of the puzzle, the whole macroeconomic picture. So here's how we're going to break this down. First, we'll look at the influencer content machine itself. Then we'll tackle that astrology for finance bros idea. We'll meet some familiar characters, figure out what actually moves markets, and then most importantly, give you a new toolkit to think with. All right, first up, the influencer content machine. And look, the point here isn't to bash individuals. It's really about the system they're all stuck in. Let's dig into why that whole model is just kind of broken when it comes to giving you good, solid analysis. And this right here, this slide just lays it all out. On one side, you've got what YouTube and social media want. They reward certainty, nonstop content, cool-looking charts, and simple stories. But then you look at reality. The real world of macro is all about probabilities, not certainty. It's driven by messy data. And you know what? A lot of the time, the smartest thing to do is absolutely nothing. These two things are just fundamentally at odds with each other. So this is the real incentive problem, right? An influencer's job, their business model is often the exact opposite of what makes for good analysis. Think about it. You can't grow a huge YouTube channel by posting a video that says, "Hey guys, I don't know what's going to happen," or "Nothing's changed, so see you next week." No way. The system demands constant content, constant conviction, and a whole lot of hopium when things are down. It basically rewards being an entertainer over being a good analyst. Okay, so you can see how this incentive structure pushes people towards, flawed methods. And that brings us perfectly to our next section, astrology for finance bros. We're going to talk about why just drawing some lines on a chart doesn't really cut it. And here's the classic cycle. You have definitely seen this. The price does something unexpected, up or down, and then poof, the influencer pops up with a video retroactively explaining exactly why it happened with all the right lines drawn on the chart. But then the price moves again and the explanation changes. The real trick here is that it makes you mistake hindsight for foresight. It's like someone telling you yesterday's lottery numbers. Useful, right? This really gets to the heart of the problem. When you only use technical analysis, TA, you're basically assuming that things like liquidity and interest rates are just stable, that they don't matter. But the reality for an asset like Bitcoin, which is a risk asset, is that those things aren't just in the background, they are the game. Microeconomics is constantly changing the rules, the size of the field, even the weather. Ignoring it is like trying to play soccer without knowing if you're on grass or in a swimming pool. So all of this creates a few, let's call them archetypes, that you'll definitely recognize. It's time for our gallery of failed prophets. Let's meet the cast of characters and see what makes them tick, and more importantly, where they go wrong. I bet you've met all three of these guys. First, you've got the TA maximalist. For them, the chart is everything. The problem is they're always reinterpreting the past, not predicting the future. Then there's the cycle prophet. They're obsessed with the 4-year cycle, acting like it's a law of nature, but they completely ignore that the world economy of, say, 2017 has almost nothing in common with today. And finally, the permabull. Their analysis is simple. It's always a good time to buy, which isn't really a strategy, it's just a mantra. Okay, so if it's not the fancy chart patterns and the 4-year cycles, then what actually moves prices? That's the big question. So let's throw out the old model and build a new one based on the real market drivers. All right, let's do a countdown of the real drivers from least to most important. Coming in at number 4 is risk appetite. This is the vibe of the market, but here's the key. This feeling, this sentiment, it's mostly a symptom of the next 3 things we're going to talk about. It's the effect, not the cause. At number 3, we have credit conditions. It's pretty simple, really. When it's easy and cheap to borrow money, There's just more cash floating around looking for a return, and some of that cash is definitely going to find its way into crypto. But when it gets harder and more expensive to get a loan, that flow of money dries up or even reverses. Moving on to number 2, interest rates. This one is a huge deal. Just think about it. When you can put your money in a boring old government bond and get a nice safe return, it creates a ton of competition for that money. Suddenly the question becomes, why would I take a massive risk in crypto when I can get a pretty good guaranteed return over here? Higher rates act like a vacuum, sucking capital away from riskier assets. And now for the big one, the number one driver, the king of them all, global liquidity. Honestly, if you only pay attention to one thing, this is it. It's basically the total amount of money sloshing around in the global financial system, and it's mostly controlled by the big central banks. When they're printing money and expanding liquidity, it's like a rising tide that lifts all the boats, and the riskiest boats, like crypto, tend to rise the fastest. But when they start pulling that liquidity out, well, that same tide goes out, and a lot of boats get stranded. So take a look at what's not on this list. See anything missing? Yeah, all the stuff that influencers talk about constantly. The Elliott waves, the head and shoulders patterns, Fibonacci this, cycle theory that. They're just not the main drivers. A lot of the time, they're just a distraction from these bigger, more powerful forces. Okay, so what do you do with all of this? The goal here isn't to make you an expert on global finance overnight. It's way simpler than that. It's about giving you a new set of tools, a mental toolkit, to help you filter all the crypto content you see. So, first question to ask yourself. Is this person talking about the actual playing fields, liquidity, rates, credit, or are they just obsessed with the ball, which is the price? If they're never talking about the macro environment, you have to realize they're leaving out the most important part of the story. Second thing to look for, do they ever say, I don't know? Do they ever admit they were wrong? Look, markets are all about probabilities, not certainties. Anyone who acts 100% certain all the time isn't giving you analysis, they're selling you a fantasy. Real, honest analysis means you have to be comfortable with uncertainty. And last question, and this is a big one. Are they offering you a real strategy or just a belief system? A real strategy involves managing your risk. It involves knowing when it's maybe better to just sit on the sidelines. It involves thinking about what else you could be doing with your money. Let's be clear, buy and hold or just zoom out is not a risk management strategy, and this quote really brings it all home. Knowing if you have a massive economic tailwind at your back or a huge headwind in your face is so much more powerful than trying to guess the next little squiggle on a chart. If you can just get a general sense of the environment, everything else starts to make a lot more sense. So we'll leave you with one final question to ask yourself next time you're scrolling. Are you consuming entertainment or are you actually doing analysis? Because so much of what's out there is just entertainment disguised as analysis. And being able to tell the difference between those two, well, that might be the most valuable skill you can have in this space.